Another breakdown video of GBPUSD that made 4% of profit. Stay until the end because I'm going to spill the secrets and as well I'm going to give you the gift by the end of the video. The GBPUSD chart is currently on the H4 time frame. So this is the time frame where I start to make my analysis. Now, the first thing I do on the H4 is basically to cover the fair value gaps to know where price may go into the near future, meaning like the next session, current session, or current day. Okay, so we can see that we have this very week at the very high. So this is the liquidity week, and on the left side we have H4 imbalance, right? So GBPU is most likely going to go to the upside to cover the fair value gap. Now, current H4 candle. So we are currently on the 7 a.m. my time, right? Which is, I think, is 1 a.m. New York time, right? So it's like before the London, 2 hours before the London. Now, we are currently bullish, right? As you can see, price is progressing to the upside, creating high highs and lower highs. And we are in for this week and as well for the H4 fair value gap. So the first thing I'm going to do, I'm going to mark that up just to see. So H4 VVG. So we have this set. Now I'm going to head to the H1 time frame, right? I'm going to replay for a bit, right? I'm going to replay for a bit because I want to come to the London session. So let's go. Let's replay for a bit to open the London session. So currently we are in the London session. This is 9 a.m. my time, right? 9 a.m. my time. Now, on H1, what I am doing on H1 is kind of the same like on the H4, right? I'm looking for the fair value gaps, I'm looking for liquidity, etc. So I need to know where price may go in the near future. Okay, so on H1, we as well have the fair value gap, right? As you can see from this week all the way to the current situation, which is there, right? So this is where price may go. Okay, so I'm going to write this down. Okay, so we have H1 fair value gap, right? Okay, so this is ultimate target. Okay, or let me, it's in the black. Okay, like that, so we can see. Okay, now let's zoom in. Now in H1, we have VVG as well. Where? So we have this pause which happened last day, okay, on the daily overlap from New York session in the Asian session, and price created fair value gap as well. Okay, so going to mark that up as well. We can mark that up. We're gonna say where is it? We have H1 VVG. Now the best thing is whenever you write something or apply something to the chart, is the best case is to always mark it up, write it down, right? So you'll know when you're gonna switch the time frames, you'll know what this represents. Okay, so whenever I'm going to go on the 15 minutes, I'm going to know that this is H1 fair value gap or imbalance. How do you want to call it? It doesn't matter. Okay, so in this case, what I want to see is price pulling in. Okay, I want to see price pulling in, and then from there I want to see price going higher. Okay, so this is 19th of the February and trade happened the next day. So it happened on 20th of February. So we're gonna replay this very quick just to go through. You're gonna see. Okay, so this got invalidated. So this is all right. Okay, because I didn't trade the Monday, I only trade from Tuesday on. Okay, so we're gonna skip to the 20th of the 20th of February. Okay, so we are in the 20th of February. Now, if we wanna do the same procedure, so the same procedure, which is very, very important. Okay, now each day I mark up the daily high and the previous daily low. Okay, so this is my daily liquidity levels, so where price may go, including with fair value gaps H4 and H1. Okay, so for the H1 we already have the fair value gap. For H4 we already have the fair value gap, so this is okay. Okay, we already have this. Now I'm going to apply the indicator that I have. So it's going to mark up the previous daily high and previous daily low for me. So we have the previous daily high right there. We're gonna mark that up. We have PDH and we have PDL, which is right there. Okay, so PDL. Going to delete the indicator now, so it's not going to mess with us. Okay, now the thing is, if I go to the drawing board and give you some secrets, which is very easy to use, right? If you have previous daily high and you have previous daily low, so if your overall bias is bullish and price is trading around PDL, you want to wait for PDL to be taken, right? You want to see previous daily low be taken out before reversing. Okay, so PDL being taken, break of structure to the upside, retracement down, and this is your trade. Okay, and this is where you want to target the previous daily high, session highs, etc. Okay, so this is exactly the thing we're gonna do. Okay, so let's dive into. Okay, now currently in H1 we have break of the PDL. We rated it, as you can see, as well in the Asian session already. We have H1 fair value gap down there, so I'm going to mark that up. Okay, we have this. It was like that before Asia session rated, so we have H1 fair value gap. Okay, because we tapped into, it doesn't necessarily means that the price must cover everything to the T. So we have two confluences now. The H1 is covered almost to the 50% and the PDL is taken out. Now I'm gonna switch to the 15-minute time frame and I'm going to put the focus there. Okay, so I want to see elimination of the previous highs. I want to see the break of structure. So which means that if we go back to the drawing board, if we have a structure, right, and you have all of those highs, okay, you have all of those highs, right, and price take out the liquidity to the downside, reverse, you want to see first break of structure there, you want to see those highs getting taken out, and you want to see those short-term highs getting taken out as well. Then we want to see retracement into the 15-minute order block, 15-minute fair value gap, etc. Whatever you want to have as a confluence. I'm going to tell you what I'm using, okay, in this video, and then this is your trade. Okay, so this is exactly what happened on the GBPUSD, and this is exactly what I'm using. So this is what I call a plus setup, right? So I'm going to reply a chart a bit forward because this is like 6:45 a.m. We want to see the London Open. Okay, we want to see the London Open first. Okay, let's see, 8:30. Let's move on. We have 9 a.m. So this is 9 a.m. Now, which high must be broken in order for me to go in? Okay, we see that this high created this low and this high was not taken out. Okay, so definitely I want to see this high being taken. Okay, I'm not going to draw BOS now because you know it's not the BOS yet. Okay, so we're gonna reply a chart a bit forward. Okay, so first thing, this high is broken, this high is broken, this high is broken, and as well this high is broken. So what do we have now? We have break of structure. Okay, we have break of structure. We are currently at 10:15 a.m. so which is 1 hour and 15 minutes into the London session. So where we can go in, currently I don't see any setup just yet. This is not clear price action for me. Okay, so we gotta be patient. Gonna reply a bit more. Okay, now my trade actually happened on the 5 minutes time frame. Okay, because look, if we zoom out, we have a clear break of structure. We're gonna apply the confluences now. We have a sweep of liquidity. We had sweep, which means that this candle swept all the lows below, right? So we have a sweep, we have a break of structure, and we can target those highs, okay? PDH obviously, and those little highs, right? So I'm going to dive into 5 minutes. Now, where my trade actually happened. So my trade actually happened there, right? On this very order block. Why on this one and not at the very lowest? Because look, we had a sweep of liquidity as well. So I'm going to mark that up as well. We have a sweep of liquidity. By sweeping, I mean that it swept all the lows on the left, right? We rejected this small order block to the T. We pushed the price up, which means that we got break of structure of those highs, so we can mark that up as well. Okay, we had a POS, and then price is incorrect way. Okay, we have tons of liquidity there, this lows, and this lows, and this low. We have fair value gap, imbalance, we have order block, right? So let's see what happened. So I'm going to apply, my entry point is going to be there. Okay, we have 25.93 as an entry point. So I'm using 2 pip rule, which means that if this is my original entry, I'm moving my level of entry to 2 pips closer to the current price action. So we have 26.07 and this is 25.93. So I'm going to put my entry at 95. I always do it 2 pips. Why? Because brokers have spreads. You know, you want to be in the trade. I don't care if I have 2 pips or 3 pips of drawdown, as long as I'm in the trade and it's going in my favor. Okay. So this is our current entry point, 25.95. Okay. We have small fair value gap as well there, and on a 5 minutes as a confluence, like so. Price going in. Covering the fair value gap, rejecting the order block, which is down there, okay, and then moving away. So this is the scenario we want to play, okay. And the last thing, let's check the 15 minutes again for the cross confluence. And as you can see on the cross confluence on the 15 minutes, we are as well have the 15-minute imbalance. So what we can do, just write this down, right? We can say 15-minute fair value gap. Okay, like that. Then switching back to the 5 minutes, where I'm going to apply my long position right there. Okay, stop loss is going to be below the lows. Okay, stop loss is going to be below the lows. So we're gonna have on 80 below the lows, it's like 14.8, let's say 15. Okay, let's go sharp on the 15, like that. So in the case of targets, you always want to switch back to the higher time frames, not a 15 minutes. So you want to target previous daily high. You want to target all of those highs. So those are the targets, right? So we're gonna raise this up. So the current is 2.28%. Okay, and we have H1 fair value gap right above. So this is the ultimate target, right? So let's see. Okay, let's go with the 4. So in a sense of targets to the T, even though if the H1 fair value gap is the target, right, is the target, I'm never placing my TP levels right on the targets, because price, like in 70% of the time, where is the brush highlighter? Okay, so price in 70% of the time comes near the level and then rejects, right? So, you know, if you want to take profit like to the T, place it like, I don't know, 5 pips, 10 pips before the actual TP. Okay, you're still going to have good risk reward ratio, you're still going to hit TP, so don't worry about it. Okay, and you're going to be in, which is, you know, the most important factor. Okay, so we have 15-minute VVG, we have break of structure there, we have break of structure there as well, we have sweep there again as well, we have PDH as a target, PDL was taken out, H1 VVG was, you know, respected. Now the last thing is to place the actual trade. So we're gonna go with place an order. We're gonna risk 1% of the balance. Okay, my balance is 100k, so we're gonna risk 1000 USD. So in the case of entry, let's apply the entry, which is 1.2595. okay, so this is our entry point, 25.95. Stop loss is 1.2580. okay, and then we have take profit, which is 1.2655. okay, so this is our take profit, stop loss, entry, and we're gonna risk 1%, which is 1000. As you can see, we have a side, it's a buy limit order. Okay, so we can just place click save. So we currently have the limit. Now the only thing we have to do now is to click play. Now how to manage the trade, you're gonna see now. When to place break even, when to take something off, etc, right? So we're gonna see it now. I'm gonna do it like that, and we're gonna go on the 5 minutes. I'm gonna do it like that. Okay, zoom in. Okay, let's hit a play. Okay, so we are currently in. We are in the drawdown, right? As you can see, this is the 15-minute order block as well. If I go back to the 5 minutes, you're gonna see we are currently rejecting our 5-minute order block. So this is why I said I don't care if I get drawdown of few pips, right? This is like, let's see, from our entry, this is like 7 pips. I don't care. Stop loss is there, that's it. Okay, as long as we are in, we are happy. Okay. Okay, we are pushing out. We are currently in the profit of 273 USD. Push higher. Now, currently in the profit 1k and 600 USD. Now, we broke this high. So this is the time where you want to place break even and be safe, right? You want to place break even. Why? Because we broke the short-term high. Okay, so we can draw POS as well. There, right? We can put stop loss to the entry point. We can move stop loss to the entry point as well. Going to give it a bit of in the profit because of the spreads, charges, etc. So you have to include that. Okay, now let's move on. We are breaking the previous daily high, which was our first target. Okay, we are breaking it. Currently we are in the profit of 3k, which is 3%. Okay, now you can as well, because the PDH was rated, you can as well move your stop loss more in the profit. Okay, you can move your stop loss more in the profit. So whatever happens, if the price retraces down, it's going to take you out in the profit. Okay, and eventually TP hit, H1 VVG was covered, and we can check our balance as well, so we can see what we had. Okay, so we are currently up 4k to the T. This is funny, right? It's a 4%. We have a closed position. We see GBPUSD as a product. We have a buy side. Okay, we have date started, date ended, entry, initial stop loss, max TP, risk reward ratio, which is 1 to 4, closed and realized. So we earned 4k in this trade. Right? It's very simple. It's very easy to use few key concepts that makes sense, that are consistent and very good to trade. Okay guys, so this is the GBPUSD that happened last week on 20th of February. This is the breakdown video. I hope you liked the video. Give a thumbs up, comment your thoughts. It's going to help algorithm push the video and as well the account to reach more people, etc. Join the FX replay community by applying my discount code IAMSEP15 for 15% off. Link is going to be in the description below the video.